Jordan. This video is being recorded on the late afternoon of Thursday, November 30th, 2023. Thank you so much for joining me. In this video, I'm going to talk about why now is the time to buy gold and dump Bitcoin. Yes, we have gold breaking out on the monthly chart, new monthly all-time highs. I mean, literally, we could be at the start of a historic move, not only over the next year or two, but over the next decade. And this video is kind of, I'm just checking to see what kind of Bitcoin crypto audience there is. I mean, I will mention sentiment a little bit. It's interesting to me. Crypto and Bitcoin still way more popular than gold. I mean, I'm looking at charting platforms. You go on CNBC. I mean, Kitco, it's everywhere. It's way more in the focus than gold. I mean, despite the fact that it's way below its all-time highs and clearly in a bear market. But there's just a couple things I want to mention. So first, and I've talked about this so much in past videos, and that's the long-term secular trend and how the nature of the secular trends in gold and the stock market, they're opposite from each other. You can't have both going up at the same time. Now, the only time you could say they were really moving together was the mid to late 60s. And I'll get into that because, there could be a repeat of that. And what does this have to do with Bitcoin? I'll get to that. So, long-term secular trends. So I've highlighted them here in the S&P. I mean, you know it by now. Secular trend here, secular trend here. Gold price was fixed, raised the price, but, great period for gold stocks. Obviously, the 70s, we all know. Then this happened 2000 to, 2009, or some say 2000 to 2011. Again, those were the best periods for precious metals. Now, here we are now with, it's important to point out, why this breakout is significant. And that's because, even though like some are calling it a 3-year breakout here, but to me, it's more of a 12-year breakout. I mean, we're finally clearing this and we're going to really run away to the upside, at least from this level. And so, why this is an important marker, because this was the start, or at least around the start of the secular bull in the stock market. I mean, boom, it's been a secular bull. I mean, a great period, whereas gold has basically gone sideways, until the last, until here, you could say. So that is really important to understand. And getting into the mid 60s. So I think the best comp for where we are here and now is probably the mid 60s and this massive breakout in gold stocks. I mean, this was like a 30-year breakout. Now, gold price was fixed. So the gold stock, I mean, this was really the proxy for gold. And so you had this hugely significant breakout here in 64. I know gold stocks had already, they'd already done well in the preceding years up to that point. And you could say the same for gold, from 2018 mostly. So that's a good comparison. Now, getting into the stock market, what happened? I always make this point. This peak here in 1962 to this peak at the end of 68, that was 6 years. The S&P only gained 50% in this period. I mean, that's 6.5, almost 7 years, 50% gain. So yes, it was still in a secular bull, but in real terms, the secular bull really ended here. If we want to go from 62 to this peak, the Dow peaked in 66, but I mean, this is barely 30%, 62 to 66. And, even 49 to 57 was really the best period. You only had this little correction in here. I mean, that was amazing. The best 8-year period ever for the stock market, in my opinion. But, even after that, the market still climbed. You started getting a few corrections. But, and I show these on other charts, how you're getting more significant corrections in here. This was not a smooth ride like the 90s. And that's similar to where we are here and now, because you had this year in 2018, which is 20% basically. You had this down, COVID, which was 35%. And then, we had this, which I think was 27, 28%. So historically, that's where we are here and now, somewhere in this period, if we're looking for the best historical comparison. So gold breaking out here, the bottom line is gold breaking out here. It's telling us that, look, the days are numbered for this secular bull in stocks. So what the hell does that have to do with Bitcoin? Well, the correlation, and I've a year or two ago, I've done a couple videos on this. Bitcoin is not a currency. This is not a hard currency, play like gold. Bitcoin is a technology play. That's why it's been most correlated to the Nasdaq. And that, look, you got to follow the market. The evidence is all in the market. I wish stock charts had the data going back to 2011 because Bitcoin went up from 2011 to 2014. I mean, it had a peak right here at the beginning of 2014. And look, that was a great period for the Nasdaq, as we know. And now the stuff you can see. I mean, this was a great period for Bitcoin, great period for the Nasdaq. Again, it happened after COVID, huge period. And look, I mean, these nearly look almost exactly the same. Now, I'm not a huge fan of correlation analysis per se as like a predictive tool. I mean, I don't, hopefully I'm not contradicting myself here. But when we're looking at, I mean, this is more than a decade of evidence here of how Bitcoin has traded. This is a technology play. It's followed the Nasdaq. We can see it. I mean, and that's why a lot of times it's been doing really well. Gold has not been doing well. So we know, again, 2011 to 2014, great period for Bitcoin. Gold was shit. Look at that. And then when the Nasdaq, excuse me, let me stop for a second. We can see here, Bitcoin had this correction. It was still a really small market. The gains for the Nasdaq kind of slowed down. You had this big rebound in gold, but then gold consolidates for 2 years, 2016, into 2018. What happened for most of that period? Huge gain in the Nasdaq, huge gain in Bitcoin. I mean, this was really when it was taking off. So look, right in line with the Nasdaq, gold was consolidating. Then, you have a correction here, crash and correction for Bitcoin. The Nasdaq did perform better, but I mean, it had this decline here, consolidation here. So, this wasn't the best period for the Nasdaq, even though it went up here, starting here, even if you want to go down here, from early 18 to the COVID low, very similar to here. But if you look at gold, early 18 to the gold was up. It had this big gain here when you had a correction in Bitcoin and in various corrections in the Nasdaq. And then, after COVID, gold had the huge move, but it peaked 4 months after the COVID low. Nasdaq and Bitcoin, they kept going and making higher highs. Spectacular move. And so this is where gold peaked, right about here. And then Bitcoin's, I should have put the percentage gains on here, huge move higher in Bitcoin. And look, what's happening now? Well, yes, I mean, everything kind of moved together off a major bottom because that happens at times. But what's happening now is Bitcoin looks exactly like the Nasdaq. And, maybe the Nasdaq can, it'll make a new high here, which really isn't that significant. Same thing for the S&P. I mean, that's possible. We can't rule that out. But the reality is gold, I mean, we're on the cusp. It's doing it now. Massive breakout. And so, again, maybe this is where we are, in the mid-60s. And, maybe the market like this has a little bit more upside while gold is starting a huge secular move, basically. So this is not the time to, conflate Bitcoin and crypto with gold, which people are going to do. And so there you go. I'm not trying to shit on Bitcoin in this video, but that's just the reality. It's a technology play. There's no evidence that it's been a currency play, at least not yet. You want to be in gold and silver, not Bitcoin. So, if you're all bowled up on Bitcoin and crypto, you got to be careful because you could be coming into a lost decade, potentially. Thanks for tuning in. Let me know what you think in the comments. Talk to you guys again in the next video.